Let's pull up the charts. So macro data came in fantastic on Wednesday. CPI was a cool print. So we see how markets react. Let's actually take a look at S&P real quick. Oh, wow. Would you look at that? Would you look at that? Who could have foreseen? I had this drawn out from weeks ago, from last week. All right, I came on the stream and I literally drew these demand zones out for you guys. Wow, who could have foreseen? Look. Front ran it barely, but this was probably popped back down into here before a reversal. So again, I had drawn this weeks ago. We had S&P was trying to break out of this $6,000 level, right? We had this major demand zone right here. We bounced up off of it a couple of times. Finally, we broke down through it. As soon as we broke down through this demand zone, what happens, right? Because this is a major demand level. You see why? Because look, it comes up, it rejects, because before it was supply. It eats through supply, comes back down, boom, finally blasts up through the supply, and now it creates support. Now the demand level becomes support. We try to break, reject, come back down to demand, come back down to demand, break, reject, come back down to demand. And this was the either we break out again or we break down. Well, we broke down. As soon as you lose this demand zone, you see how fast we puked. So you lose it and then you just boom, 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 boom. So we called it perfectly. So look at that, right? It's just patience. We know what's going on. You just have to be patient, even if it's not what you want to see in the short term. This is a healthy correction. So now you're starting to see people complain, oh, S&P's down, 10% from the highs. Oh, my retirement's gonna, yeah, look, literally 10%, right? Right now, 9.6. It's down 10% from the highs. What's going on? Are we going into a recession? Tariffs, da-da-da. It's fine. It's not, this is not a breakdown, a break of market structure to the point where you should be worried about a recession. Because if you go back down here, we were talking about this drop. So we had this multi-year bear market over here. So let's do a channel. Right, where essentially you're doing something like, say something like that. Okay, so you had this multi-year from December 21, bear market to where you set the low in 22. Then you finally start breaking up. You broke out of the channel, retested it. Okay, finally break out. Cool. So you got this big bear market. Then you break out and you come back down into a bull market. Okay. So this was the first major correction on the S&P in the bull market. Well, how much did we draw down? 10, 11%. Okay, look at that. Well, we came down 11%, and what did we do? Up only for the next couple years, right? How large was this correction? Not nearly as much, 6%, right? See this one. There you go, 10%. Look, normal. So look, 10% correction, up only. 10% correction, up only, okay? 10% correction, same thing. What am I betting on? Well, you create, this is support right here. Up only. That's what's going to happen, okay? I'm going to go out on a limb and say that's what's going to happen. So 10% pullback, 10% correction is normal. It's already happened once, twice, 3 times. I'm not betting that this third time that we get a 10% correction that it's over and it's about to roll over as CPI comes in cool, as inflation's coming down, as interest rates are coming down, as the DXY is coming down, as yields, bond yields are coming down. I'm not looking at this and saying, oh, it's over, cycle's done. Nope. It's just a normal temp. We just had this one right over here. This was it was literally last year, July 24. We get a 10% correction in equities to, August 5th when we had the August 5th nuke. Okay, there's your 10% correction. Then we come back. All right, we get this demand zone again. And then we just got another 10% correction. We just came back down, retested this demand. We called it perfectly. All right, gentlemen, makes sense? So we're looking good. All right. Now, is there still potential for a little bit more downside before we bottom out? Yes. Very locally. Like we could, at the lowest, maybe come down in here. But I don't see that happening. That's not what I'm betting on. And the macro data doesn't suggest that either. Okay. So then if we go back to the Dixie, we call this one too DXY. I know this is VIX. Where's it DXY? Right here. Look, we called this one too. We had this in green as demand. We break through the demand and look what happens. As soon as you lose this demand level, it just pukes straight down. Now we're getting this tiny relief bounce. But if we lose this level, because this would be the next demand zone, you could even draw it like, that, I guess. This would be the next demand zone. If you lose this, there's no structure here. You're coming all the way back down to here. And I'll keep this drawn so that whenever we come back in a stream down the road, you guys can be like, oh my God, he called it perfectly again. So that's our next demand right here. Okay. So super bullish. All right. We already talked about why that's bullish. One other thing I want to talk about that we didn't really talk too much about in the past, and then we'll get to Bitcoin, is the VIX. So the VIX is going to be our volatility index. Okay. When the VIX is pumping, that's going to be prices going down, people de-risking, markets are drawing down. So when this VIX gets crushed and heads down towards zero, okay, in this area, so we'll say like down in here, this is when markets are pumping the hardest, right? So VIX is the volatility S&P, volatility on the S&P index. So you see here in December, which is pretty much where we topped out in crypto and altcoins, you'll notice we were beginning of December, we were topped out in altcoins. Everything was at its all-time highs. Then we get this huge VIX spike. And that's whenever we had the start of the downturn on altcoins. We crush again, we kind of get some relief. And then we just been like this until, boom, we get this VIX spike all the way through February and March. And that's whenever we begin to get decimated on altcoins and on the S&P, right? Because people are de-risking, people are getting out of the market. Now, finally, we're starting to see some relief on the VIX. So again, another point of confluence that I'm looking at and saying, okay, this looks like it wants to start breaking down. Maybe do something like this. If we get this to get crushed all the way back down to these levels, again, bullish. Because the lower the VIX comes down, the more confident investors are to put their money into the market because the volatility is down, right?